Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, December 12th, 2019. I am Frank Ochoa, aka PivotBoss. This is the day after FOMC statement and Fed interest rate decision, which came out yesterday. What you'll see right here is that price was at 31.36 quarter right when the release of that information came out. It immediately went bid. Here today we're seeing a little bit of rejection of prices above the previous month's close, and we're back down a bit, but we're still holding just above that zone. So we're going to continue to keep an eye on how price responds to the 31.36 quarter here. That's going to be very important to see how the market responds to that price. But overall, everything continues to be trending higher. Even if we were to shake out lower, it could be a double dip buy for continuation. Really, a failure to hold that pivot low there would suggest a broader sell-off back toward maybe the 200-day, which would be 29.50. But right now, any pullback, even to take out that low into this LVN, could still be a buying opportunity for a continuation higher. That's how strong this market has been. So we'll continue to see how this thing plays out. Here's a look at the NQ. You'll see right here very similar price action for the NQ as well. We have a FOMC key level of 83.5 right there that came out yesterday. And again, if we kind of zoom in on just this price action from the previous session, here it is right there, the FOMC key level. Price popped up on that news. We've now seen a rejection of prices at and just above the previous month's close, which is that blue dotted line, and we've pulled back to that key level. So again, that's the low of the day. We're going to continue to watch that zone very closely. Overall, as I mentioned with the ES, the expectation is for further overall upside type of price action here. You can see this is what's really important here. The trend has been up. Additionally, the PIMAs, these moving averages, are all stacked and sloped. And for the most part, when price comes into the PIMA trigger zone, it's been bought. Bought here, it came down a little deep, bought. Here it is right there coming into that zone and being bid right back up. So everything still suggests more upside. We kind of have almost an ascending pattern here that suggests a break higher. And again, even if we were to flush down hard, that could end up becoming something like this type of day here, where it becomes a big rejection day or something of that nature. Even if we were to flush down here and take out that low into the LVN, it could still be a buying opportunity higher until proven otherwise. So continuation higher still expected right now until proven otherwise. But keep an eye on that 83.5 for early directional conviction. All right, here's a look here at crude oil. You'll see with crude oil, this one has been mostly range bound. In the previous session, it got a pretty aggressive drop downward after the inventories report, a sell-off right after the report, and this thing dropped hard to the lows, and then it bounced back up and stayed mainly within that narrow 5-day range. If you look down here on the 5-day reading, you can see we have compression. This one is a confirmed compression. This one over here is still developing today, but still in the range, so it's still going to likely be there. Overall, this thing is building energy. That's what that is. That's an energy building phase. Similar to what we saw over here. We had a big move down, and then here's 1, 2, 3, 4, 5 days where price was going back and forth, back and forth. That's what we're doing here. 1, 2, 3, 4, 5 days where it's going up and down, right? Up and down, up and down, up and down. And over here is doing the same thing, but eventually we're going to get that breakout. Sometimes it starts with a failed breakout. Sometimes it gets just a true breakout. But either way, we're about to see a breakout here pretty soon. Perhaps we'll see it by the end of the week. Maybe it may come next week. But right now, this thing is clearly compressed, and at some point here, we'll be looking for expansion. Now, once we do see expansion, again, we can just use our quantification tools here. 4.58. 4.58 is the amount of points we would likely see on a breakout from this range. So 4.5 points. Right now, we're trading 59. Do we break down to the downside here and get back toward 54s, or do we break to the upside and get up towards 64s, somewhere in that zone? Right now the range has been mostly this way, and every time we get to the upper end we've kind of pulled back. We've pulled back, and here we are again. So one last thing I'll say about crude. Right now, when you're inside a channel, you kind of do the same thing over and over. The last time we popped, we held here for about 5 days, and we had a big 1-day drop. We talked about that last week. We got it. here we are again. We're at the exact same spot, exact same look and feel. One day here, we may see a one-day move back toward 56s. That takes us all the way down. Right now, trading 58s, 59s. So again, we should be looking at some sort of expansion out of this range very soon, likely to the downside, but either way could spark a move of about 4.5 points. Lastly, taking a look at gold futures, you'll notice here with gold futures that this one is pretty active this morning. It has done something that is, it really hasn't broken down through these new lows, and it hasn't really had the ability to break higher yet. It has shown nothing but lower highs this entire time, and right now, although we're at a lower high still, technically speaking, this is the first time here where it looks like we may actually break through and test that higher high. Right now we've seen a pretty good reversal, a breakthrough 2-day highs. This was an extreme reversal pattern right here, and we flew right back up. Are we going to stay in this channel similar to crude and pull back? Or is this an opportunity for this thing to break through and return back toward 1510, 1525, somewhere in that nature? So right now, this market, as I've mentioned before, it looks very similar to when it was back here. After the move higher, it built this range. This is when it saw the breakout and it exploded higher. This one is even more significant. And are we seeing the breakout here like we did? Because if so, this could be the beginning of a multi-month move higher. So right now, gold looking very strong. This is looking like it wants to challenge that high. We have a very tightly compressed range right now, and we have to see a good confirmed breakout. But if we do see it to the upside and we break this range, this channel to the upside, that could change things tremendously over the next few months, very similar to what we saw before. So here we are. I'll say one more thing here. We saw a very nice trend into the beginning of the year, from November lows into the beginning of the year, February, and then it built this channel. Then it broke out and rallied another 3 months. Now it's built this channel, and this channel is 1 month bigger than this channel and more prominent. Are we about to see another big rally into the first Q1 of the year? So this is going to be something to watch. Again, if we can get above 1500 and really start to sprint, that's going to be the breakout we really need to see here. So this is looking pretty good right now. Any failure to get back above 1490 returns price right back down within the range, and we stay range bound. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.